I'm Dr. B, and yes, I'm a real ER doctor, so you may be wondering, what am I doing here in this space? Well, after years of pain from sports injuries, I listened to my doctor and had to pivot into a career that would keep me off my feet as much as possible. I also have a degree in finance, and so it was a natural transition to join Verified Investing. I'll share my prescription for becoming a successful investor right here on the Market Pulse.
Welcome to the Market Pulse. I'm Dr. B here at Verified Investing. Today I'm going to be going through my recent trades. I'm going to be looking at the good, the bad, the ugly, where I could have done things differently. And I'll pull up my charts and show you over the last several trades that I've made. And you'll see how I look at the charts, how I put my orders in, where I put my orders in, where I stop out, where I add to my positions, things like that. So very good. So if you haven't seen the beginning episodes of the Market Pulse from 1 to, I think this is the 15th episode now, go back, look at those episodes. They're about 10 to 15, maybe 20 minutes at the most. You'll learn a lot of information very quickly, and you'll be able to follow along with me, as I review my trades. All right, so I'm going over my recent trades, and actually this is a trade that I took today in the Apex Day trading room, and you can see that this is the S&P 500. This is the 1-minute chart. You have a very clear parallel channel that's developed here, and what's really interesting is it started with this bear trap. So last episode we talked about bear traps and bull traps, and you can see that once this price came back above, we actually had a recapture of this level and then a rapid move higher. And again, things look a bit bigger on the 1-minute charts, but this is where I tend to trade, okay? So I didn't catch this move down here, but what I did catch is I caught this move here on the S&P. Now, right in this area, there was, you can actually see it over here. You can see this little candle. That's an area of resistance, right? A pivot low. This was my area of resistance. There may have also been a gap fill there. But what I did is I noticed that this was likely to be a bull trap. Anytime you see a bear trap, you also have to be looking out for a bull trap, right? And vice versa. So what I did is I waited for this to break down. It closed below here on a 10-minute candle, and then it broke up. And what I did is I entered the SDS long, okay? SDS is ultra short of the S&P. I think it's 2 or 3x. And so I was long a short leveraged ETF, and I rode this down all the way down to about here, all right? And there was a pivot high here, there was a pivot high here, and this was also from this area to this area. This was the 50% fib, plus you had the midline of the parallel. I nailed that trade, right? So today we had a lot of good trades. I think Gareth had 3 or 4 trades. This was the one trade that I took for the day, and it worked out well, thankfully. It doesn't always work out, right? It doesn't always work out. So we're going to talk about this trade here on Nvidia that I took last week. And I noticed there was this falling wedge developing right here, just above support, okay? Anytime I have a line drawn here, and again, this is the 1-minute. Anytime I have a line drawn, it's typically a support or resistance on a larger time frame. But what happened here? What happened was I put my order right in this area. Okay, it was the third hit of this falling wedge. And again, if you haven't taken the 1-minute scalpel, I talk about this third hit on the falling wedges and how powerful that is. Okay. And what did I do here? I entered a position, and then I quickly stopped out because it was going against my thesis. Now, I saved myself a big drawdown here, okay? But had I dollar cost average through here, maybe at support, and then again on a pierce of support, I would have been able to get my average, say somewhere in here, and then have this gain on Nvidia. But what I did is I actually pivoted. I waited. I took this loss. All right, small loss. I stopped out quickly. And by the way, that's the key. Keeping your losses small and letting your winners run. And you can absolutely do that. You just have to train your brain and your mind and learn the charts to be able to do it. So very good. We're going to be talking about how I came back from that Nvidia loss on my stop. All right. So what I noticed here, this is the same exact chart. Here's this little wedge. This is where it broke down. What I noticed is that the S&P over here on the right screen, this is the 1 minute of the S&P, was creating an inverse head and shoulders pattern. Okay. So an inverse head and shoulders pattern is very bullish, as you know from the previous episodes. And at the same time, about the same time, right? Here's 10 a.m. Here's 10 a.m. Nvidia was also creating the same exact pattern. Okay? And what I did is I actually entered the trade, excuse me, right about here. Because I saw this price coming down, pretty big move down onto support. So I entered right here, about 125.45. I think that was my exact order actually. And then I just sat back and waited. And I kept a look, an eye on the S&P, and I waited for this to play out. And I think I took profit somewhere at this pivot high. All right, so somewhere around 128. It's about $3 per share, right, on this stock. So pretty amazing. And then what I did is I also noticed at the same time that SMCI was forming the same exact pattern at the same exact time. And I took both of these trades in the Apex Day trading room last week. Again, here's the inverse head and shoulders, okay? And the other thing I noticed about SMCI, it was strong relative to other stocks. The other thing I noticed, a little bit of a bull flag here, right? And then there's your move higher. So all of these little nuances I noticed, and on SMCI, I think I entered somewhere in here, okay? Somewhere in that consolidation. And probably, I think I took profit somewhere in this area. Pivot high, pivot low. This is usually a good area to take profits, and I think I took my profit right in there. So, or somewhere in this consolidation. So really two amazing trades. So one loss, right, with the stop out, but two trades that very clearly made up for that loss. And I think it's important. It's important to be transparent and show you you're not going to win on every single trade. You're just not, right? So you have to be able to take your losses with your winners and be able to then pivot from your losers. This is SMCI on the daily chart. You can see a couple things here. You can see this pivot high right here, this rising parallel. There's your pivot low, pivot high, pivot low, very clear parallel channel. Check this out. Price came up, hit this area, and then look at this fall on SMCI, right? So I noticed this parallel, and this is a screenshot from today. But last week, let's say right in here, we weren't sure what this was going to do. But I saw this here and I started to trade this right in here. What I'll do is I'll go to the smaller time frame and I'll show you exactly how I traded this. You can see this is the 1 minute chart. This is the larger parallel, this blue line here, okay? And you can see there's a parallel on the 1 minute chart as well. And I noticed here that there was a little bit potentially of a bull trap right in this area. So I entered SMCI short, I think right in here actually, okay? Right in here. Once the price came back below and closed below, I realized this was a bull trap up here from a larger time frame, okay? This line is that pivot high, and then again, this is the parallel, top of the parallel. And I entered right in here and shorted this down. I think I took profits maybe at the midline here of this, no, because this parallel wasn't here yet, right? Because you have your 2 points there. Probably took profits somewhere in this area, because that's a pretty good move right there. So that was a great trade. But just to show you how I put all of this together, right? And if you look at my RSI, there was bearish divergence. So all of these things are going through my mind every single day as I'm trading. and I'm looking at these patterns and looking for bull and bear traps and trend lines and capitulation volume signals and all sorts of things, right? This has taken me years and years of practice and studying to try to figure this stuff out. So taking a look here on HYMS, okay? So what's really interesting is on this 10-minute chart, you can see both a bull trap and a bear trap. Now, I wasn't quick enough to catch the bear trap, but I was able to get this bull trap here. I saw this resistance on a higher time frame. This is your weekly chart. This is the all-time high right here. And I noticed that this was likely going to be a bull trap here, right? So what you had was you had a bull trap on the weekly time frame, just a small wick, and then you had a bull trap, pretty large bull trap on this 10-minute parallel. And what I did is I started to enter this position somewhere in this area, all right, and I took profits somewhere near this this midline of the parallel. So very cool. And then when this came down, this was the other opportunity here to go long, actually, once you broke back into the pattern. But I'd taken a profit for the day. I just kind of sat back and you know, moved on into the weekend. This next chart is let's see, ARM Holdings. Okay, this was at the very highs of the charts, and again, you can see this. Here's a bull trap here, and you actually created a head and shoulders pattern. So here's your neckline, right? Here's your neckline, and I was saying, okay, this is at the all-time highs, essentially double top. You know, it's overbought. This is likely to go lower. So I started to short here, and this is the 10-minute chart. I shorted here on the 1 minute when you had a 1 minute close, but what happened? The price ripped back higher, all right? Now, do you think that I let it go all the way back there? No. I realized this was a bear trap, and I stopped out right here. All right, let me just show you that again. So I realized this was a bear trap. I entered right here. I stopped out right here. Took a small loss, and you know, I noticed that this was a failed pattern. You can see here, this is a chart from snapshot from just maybe an hour ago, and the chart still hasn't moved lower. I think at some point it will, but you know, you always want to be careful because this can just keep going, right? So you never want to be caught in this. If the thesis is invalidated, if your thesis is invalidated, that's when you need to stop out, okay? There's times to dollar cost average it into stocks. There's times where when your thesis is invalidated, that's typically when you should stop out. So anyway, I wanted to show you this because it's not all, you know, it's not all fun and games, right? Your stop losses get hit. Trades go against you. You have to understand how to take the good with the bad and work through it. So I hope you enjoyed that episode of the Market Pulse. Definitely revealing to be so transparent about my trades. And again, you can hear me trading in the Apex Day trading room every day from 9:30 to 11 a.m. And then again, some days I'll be trading from 1:30 to 4 p.m. But every single day the trading room is open from 9:30 to 11 and then 1:30 to 4 p.m. We always have coverage during those times. And yeah, really interesting to show you all of the different techniques and what's going through my mind when I'm looking at these trades. And you can see sometimes it works, sometimes it doesn't. So very interesting. Thanks for watching. I'll see you next week. Take care.